Hi, and welcome to Dollars and Making Sense, a weekly show about finance, money, and investing. I'm your host, Ray Treverson from OTG Capital. We broadcast locally on Radio Northern Beaches and around Australia on the Community Radio Network. I'm really pleased to welcome back to the microphone Paul Mather from FBT Solutions, who was recently on the show. Paul, welcome back.
Thanks very much, Ray. Great to be back.
Now, the last time we sort of crossed swords and had a bit of a chat, it was really a bit of an intro to fringe benefits tax. And I guess one of the things that was a real education for me, because even though I'm a small business owner, I haven't paid a lot of attention to fringe benefits tax. We talked about this gap, and during the last time we talked, you were talking about maybe because the dollar value is not huge, but the percentage of non-compliance that's occurring out in the big wide world is pretty large. And so it's starting to incur the wrath of the tax office. I guess, given where we are now in the tax year, do you still see that as being the case, that the tax office is starting to become a lot more alert to these kind of non-compliance activities?
Yeah, look, definitely. And look, at the end of the day, the tax office makes these announcements, and of course the government sees these things, and the government goes, okay, well, go and close that gap. We'll give you some more funding, some more resources, go and close the gap. So it's, obviously it's like, well, the ATO is accountable to the government around these things as well.
Of course.
One of the things I mentioned, I think, is one of our sort of takeaways from the last session was that, the ATO are looking at what I call the low-hanging fruit. So they're looking up all of the motor vehicle registry data in every state and territory, and they're going, right, we've got all these vehicles, thousands of vehicles probably, registered in business names. Let's cross-check and see, of those businesses who have motor vehicles registered in the business name, which of those businesses are registered for FBT and lodging returns. For those that aren't, then they're picking up the phone, making a call, saying, look, just wanted to notify you, we believe you've got an FBT obligation, and we're going to conduct an audit. And so then from there, they'll send out a formal letter and they'll start that process.
Now, ladies and gentlemen, you've probably heard about something called artificial intelligence. And if you're ever wondering what one of the key applications of artificial intelligence could be, this is absolutely one of those things where you could easily send a robot off to do exactly what you've just described, Paul. And I've seen this in action, and it's amazingly accurate. But again, we were talking during the last show about the fact that when we're doing education and tax agents are talking to their clients, simply sometimes the mere act of educating and communicating to the community at large that there's activity in this space will, I guess, not necessarily frighten, maybe shake the tree a little bit. And like you said, low-hanging fruit, and get people to self-regulate, and they'll go, oh, I've got to attend to that, and then actually get in and do something where they don't necessarily need to shake an auditor out of the process to make that happen. Are you seeing that a lot, given that your mainstay of business is simply doing FBT for people?
Yeah, look, definitely. Accountants are becoming more aware. The fact that that FBT is a real tax, and they're seeing the warning signs. You go to the ATO's website, there's a lot more content on there now. The ATO set out all the different case studies, the reviews and audits that they've been conducting. They've been publicly sharing information around the audits, sort of this business with a Mercedes convertible. There was no logbook, there was no contribution. FBT, we assessed FBT liability of $200,000 plus a 50% penalty of $100,000. Wow. So these things are real. This is what we're seeing. I've worked, directly with accounting firms and organisations where they've had an FBT audit, and that there's no good outcomes on these things. You're talking about significant dollars when you're going back 2, 3, 4 years, depending on what the ATO's request or requirements are through the audit. Right. The dollars add up very quickly.
And how far can the ATO go back? I mean, I'm told by my accountant I've got to keep 7 years. Can they go back 7 years?
If you're not registered for FBT, the time limit is unlimited. They can go back
Wow.
if they want. The most I've seen is 12 years. Generally
12.
12 years with an organisation who effectively bodged up or recreated logbooks, and the tax office said, no, you've committed tax evasion, because they found out that the logbooks were not correct, because on certain days where the vehicles were supposedly, and we're talking Mercedes, BMWs type vehicles, were supposedly parked at home, they'd been going through toll gates on multiple occasions on those days. So it's straight away the cat's out of the bag, so to speak.
Yeah, I often talk to people on this show and even barbecues and client meetings, whatever. Data matching is something that has been going on far longer than people might appreciate between government departments. And when we're talking about Services New South Wales sharing, for example, tolling data with the ATO, which I guess they're compelled to do so. But even still, that together with phone records and again, guys, if you're ever worried about being tracked, I had to laugh, Paul, because I come from an IT background. And so when the conspiracy theorists were getting all concerned about, vaccinations and being tracked and all of that, and they're carrying around the most trackable device on the planet, their smartphone. It's like, guys, they can track you to within 5 meters on the planet, anywhere on the planet. Believe me, you don't have to worry about vaxxers. It's the phone that's going to get you every time. So, I mean, you consult to a lot of these companies. What are the kind of things that you're telling them, the top 3 things that you're just saying to companies when you go in and help them with FBT?
Yeah, look, I think the first thing is really, as I said earlier, it's around the motor vehicles. It's giving them an understanding of what FBT is all about, but as I said, it's pretty hard to hide your motor vehicles. You can sort of hide a gift to an employee or a restaurant meal or something. Or they're certainly harder to find. As sort of finding the pin in the general ledger haystack, so to speak. But motor vehicles, pretty hard to.
And again, from an IT perspective, ladies and gents, those of you that are out there buying electric vehicles and even the modern day vehicles, we recently bought a European car for my wife, a Peugeot, a little wagon. But these cars breadcrumb, and by breadcrumb is that they track everywhere you go, and whether you like it or not, Google and Apple track everywhere your phone goes. It's sitting in the phone, and so all the AFP or the security services have to do is give them a warrant, and they can ask for the data, and they'll be able to tell you exactly where you've been, wherever your phone's been. They'll know it right down to the microsecond. And so I guess when you're talking about data transparency, Paul, motor vehicles is obviously the top of the pops. What's the next big item in FBT land that you need to be, I guess, consulting and advising companies about?
Look, it's a tricky one in terms, because motor vehicles is certainly out on its own. I'd probably say there's 2 categories. One would be entertainment, and the other one would be employee expenses.
Right.
And so entertainment can be meals out with, it could be a staff function, a celebration, or meals with clients. Could be hiring a corporate box. Could be tickets to, Taylor Swift concert or to sporting event. So that whole area of entertainment is quite broad. And there's also this sort of grey area in terms of, well, it was actually a business meeting. We actually, over a meal, we were discussing business. Is that entertainment, or is it what we call sustenance?
Right. So again, I'll ask the dumb question. I mean, I recently travelled up to the Central Coast to have lunch with an old colleague, and we did talk business legitimately. We talked a little bit about personal matters. How's your wife? The kids, yada, yada. But the primary purpose of me hopping on a ferry and going over to have lunch over on the Central Coast was to discuss business. Is that all tax deductible?
Look, if you're going there and the main purpose is to have the meeting, and if the food and drink that you consume at the meeting falls within what we call a light meal, so a light meal was really, sausage roll or a muffin, coffee, orange juice, croissant, maybe something like that, then it potentially falls within a deductible meal and it's not entertainment. But if you've met with someone at a restaurant, maybe you've had 2 courses, maybe you've had a glass of wine or a beer, then that sort of throws it into the entertainment bracket.
Does it really? Okay.
There's a big distinction too, in terms of, because you're talking about sort of a during the day travel and having a meal. If you're traveling overnight, say go from Sydney to Melbourne overnight, then there's no limit in terms of, you could go out for dinner, you could have a 3-course meal, you could have a couple of bottles of red wine with your meal, and that's sustenance, because the employer is effectively required to provide you with a meal because you're traveling overnight for work purposes.
Fair enough.
Yeah.
But that is a tax deduction then, isn't it? It's a legitimate claim of an expense. I mean, I try and differentiate. For example, I go to conferences a couple of times a year, and so I always figure from the moment I leave home, pretty well all my expenses, grab a cup of coffee at the airport, obviously my travel to and from, but I look at those meals. I've got to be there and I've got to sustain myself while I'm away from home. So I figure that that's a legitimate claim on my business, even though I run my business, but it's still a legitimate claim. But if, for example, there is a client then involved and I'm taking them out for a lunch or whatever, you're talking now between a light meal and that's an interesting one. Is the legislation pretty clear on that, or is that again open to interpretation?
Look, the legislation's not that clear. The tax office have a ruling. Anybody wants the reference, TR 9717. And so within that ruling, it's 30, 40-page ruling, which just you need to have a big meal before you start, to sort of get you through the ruling. There are quite a few drinks to get you through it, but there's certain parts in there, and there's 4 tests. And the tests are, well, why was the food or drink provided?
Right.
What food or drink was provided? When was it provided? And where was it provided?
Oh.
So where is an on-site or off-site, on your premises or off your premises? But, practically speaking, though, we talked a bit about this earlier, sort of the burden of the compliance. Is it worth all the effort? Every time you get a receipt or an expense claim for an employee, you can't be sitting there going, so why was this food or drink provided? What was provided? When was it provided? Where was it provided?
Yeah.
So some better guidance, whether it's saying if the meal's less than $30 per head, then that's fine. If it's over that, it's not. Some sort of guidance would be good. And look, having said that, a lot of organisations manage these things through their policies anyway. Now, so I gave the example before: 3-course meal, 2 bottles of red wine. Well, the company policy might be, yes, we will reimburse the cost of a meal, less than $100, but we won't reimburse the cost of any alcohol, say.
Okay.
I'm not promoting that as a policy, but
no.
Yeah.
But I mean, it's basically a guidance level. It's a guidance level.
Yeah.
Okay, well, look, we're just about halfway through. You're here on Dollars and Making Sense, a weekly show about finance, money, and investing. I'm with Paul Mather from FBT Solutions, and we are talking all things FBT, entertainment, and vehicles, and having a great time discussing, do we have 1 bottle of wine or do we have 2? We're going to take a short break, and we'll ponder that during the break and be back with you in just a moment. Hi, and thank you for listening to Dollars and Making Sense, a weekly radio program about finance, money, and investing on Radio Northern Beaches and nationally on the Community Radio Network around Australia. The views, comments, and opinions aired during our program should not be construed or viewed as financial advice. Any commentary is general advice only and does not take into account your objectives, financial situation, or needs. You should consider whether the advice is suitable for you and your personal circumstances. If in doubt, you should contact an authorised licensed financial planner. We welcome questions and feedback, and you can get in touch with us via our blog, social media channels, or email. Please search for Dollars and Making Sense in your favourite podcast platform, or check out our blog at otgcapital.com.au/blog. Hi, and welcome back to Dollars and Making Sense, a weekly show about finance, money, and investing. I'm your host, Ray Treverson. With me at the microphone today is Paul Mather from FBT Solutions. And we've been talking all about FBT, obviously, because that's the name of the show this time around, but also what constitutes entertainment versus sustenance. And Paul, before we went to the break, I guess it's always a matter of interpretation. And so given that the law can be a little bit fuzzy, I think if we leave it to human nature, they may, I think if you, depending on your taste buds and your proclivities to certain activities and the like, the discussion of whether 2 bottles of red or maybe 5 bottles of red over dinner or lunch that was appropriate for lunch, depending on the outcome of the business deal, I guess, is always going to be one of those funny things that we talk about. But look, let's move on. Reportable fringe benefits, or RFB, according to, I love these TLAs, I love abbreviations. So all fringe benefits, it says here, are reportable unless they are excluded. Can we just exclude, or we actually have to do something? Because some of these key exclusions also talks about electric vehicles or salary packaging. So that's what I really want to get into now in the second part of the show, is talk a little bit about salary packaging. Start at the basics. What is salary packaging?
So salary packaging is effectively where, as an employee, we agree to sacrifice some of our future salary in exchange for non-cash fringe benefits. So it's something that we can only do going forward. We can't organise it going back in time.
All right. So when we're talking about, for example, meal entertainment or entertainment facility leasing, and you've got here in brackets, unless salary packaged. So what are you saying to your employer? I may want to eat out in the future, so I'm going to salary sacrifice some of my salary against a meal or a entertainment facility. An entertainment facility, what's that? A corporate box for the footy, is it?
Yeah,
it is. Oh, okay, good guess. Well, okay.
See, it's obvious, isn't it?
Well, but I guess I'm curious. I don't go to the sport that often, but I mean, I'm wondering, can I book seats at the Enmore Theatre to go and see my favourite rock band, then and salary sacrifice that? Can I do that?
Yeah, look, now you can. We have to step back here a bit. So around the salary sacrificing of entertainment is pretty much limited in terms of there being no FBT implications. It's limited to certain types of employers. And so these are employers that have what we call FBT exemption status. So it's not-for-profit hospitals, public benevolent institutions, health promotion charities.
Is OTG Capital benevolent? No, probably not. We're trying to make money for our clients in our investing. I don't think I qualify somehow.
No. But, in days gone by, we're talking 2016 prior, employees that worked in those organizations were able to salary package unlimited amounts of entertainment.
Oh, wow.
So, an employee might package up the cost of the food and drink and the venue hire for someone's wedding, a relative's wedding, maybe a son or daughter's wedding. And they could do it free. But those rules were shut down significantly.
Okay, so that's gone with the wind.
There's a little bit left. There's about $5,000 left per employee per FBT year, but that's only for those specific types of employers. For all other employers, packaging of entertainment is not relevant. So what you were sort of talking about in terms of the reportables is that if there's meal entertainment and entertainment facility leasing, if the employer provides that, so they hold a Christmas party, client functions, staff functions, all of those types of benefits are not reportable on the employee's payment summary. However, if you work for, say, one of those exempt employers and you salary package the meal entertainment, it is reportable on the payment summary.
So, again, reading your background notes on this subject, commonly salary packaged benefits include motor vehicles, and I think we've done motor vehicles to death, so I don't want to go any more into that. But car parking, portable electronic devices, I guess that's a phone, where a relocation expenses and remote area benefits. So relo expenses are an FBT thing. So what do people in the armed forces? Because I used to move crazy when I was in the armed forces for 10 years. I did 22 moves. Is that an FBT event now?
So the FBT law contains a lot of exemptions, and one of the areas where there are a number of exemptions is relocation.
Okay.
So the law recognises that if you're an employer and you've got employees, and if you relocate those employees in the course of their work, you say, I need you to now move from Sydney to Perth, or you hire someone from Perth, I need you to come to work in Sydney. The law recognises that all of those costs are not considered to be a taxable fringe benefit. They're exempt from FBT.
Okay, that makes sense. I guess that makes sense. So relo, we've talked about remote. Okay, in-house childcare and recreational facilities. I guess in-house, what's that childcare in the actual workplace, is it?
Yeah, so on the employer's premises. I mean, when I say the employer's premises, it doesn't have to be in their main office. I mean, I worked for EY for 10 years, and my son went into the EY childcare facility, but it was actually sort of 2 blocks up the road.
But I mean, it's still something run by Ernst & Young on your behalf.
And it's on that's officially part of EY's premises. And so the exemption applies for that childcare. But unfortunately, if say I put my son into a different childcare facility and was paying the childcare fees, then there's no exemption on those fees.
Okay. I guess the other big one I see here on the list, airline lounge memberships. I know, again, when I was back in corporate, having a Qantas club, or back in the day, gosh, showing my age here, Ansett. It's one of those things that, we brandish and going, yada, yada, I've got one of these, but that's an FBT thing as well, isn't it?
Yeah, it's not a good topic at the moment, is it, with Bonza and Rex and
probably not.
Vanuatu and others. But when the FBT law came in the 80s, I wasn't actually in Australia at the time, but my understanding is Qantas lobbied the government at the time and said, look, we want an exemption for our airline lounge memberships. And so, as far as I know, they were granted, well, they weren't. The exemptions in the law. It's an interesting exemption because you don't have to use that airline lounge membership for work purposes. It's just a straight exemption. And so that's why it becomes it's a popular salary packaged item, because then you get all the benefits of the lounge, but you also get tax benefits through salary packaging.
Yeah. And gone are the days. They're far more expensive these days than they were when they were first introduced. They've obviously realised how much they actually cost. So when it comes to salary packaging, again, I kind of agree with your comments here in your notes, can cause headaches from both payroll and FBT, and it's often outsourced. And I guess that's one of the things, given your expertise in the FBT area, you end up doing a lot of salary packaging consulting on behalf of corporations, don't you?
Yeah, that's right. Corporations, also not-for-profits, especially those not-for-profits who have those special rules, those special exemptions. It makes sense for them to ensure that they are offering salary packaging to their employees. But the other thing too, electric vehicles. I know we've sort of talked about vehicles, but electric vehicles with the exemption for electric vehicles and the hybrid plug-in vehicles, that's really, I guess, thrown it. It's been a big boon for salary packaging.
Right. And are the exemptions for EVs going to continue in the foreseeable future?
So the plug-in hybrids finishes 1 April 2025.
Right.
But if you lease one prior to that date, the exemption will continue.
Okay.
The general EV exemption that'll be reviewed by mid-2027.
Okay, so it's still a fair way out.
It is. And look, I guess who knows what will happen at that stage. It'll be up to the government to decide what direction to take from that date.
But given your expertise, just on the periphery, do you think it's worth people looking at a full EV from a salary packaging perspective? Do you think it'd be in their favour to do so?
Oh, look, definitely. With no FBT, so with it being exempt, I mean, there's certain requirements to meet to gain the exemption and for the employer to gain the exemption. One thing to be aware of, though, even though it's exempt from, it may be exempt from FBT, it is still reportable on the employee's payment summary. So it's worth knowing that, and it's important to know that because your EVs tend to have, on average, a higher value.
Yeah, they are, roughly speaking, 10 to 20K more expensive than the equivalent fuel one. So I sit there, but again, as we speak, the government grants and subsidies are filtering away rather quicker than I thought they would, especially given the supposed green credentials of some of the people that recently came into government. I was expecting it to hang around a lot longer, and a little bit disappointed. And so again, I'm curious then, when you walk into companies that you are consulting to and providing your FBT expertise, then some of these key takeaways we talked in the previous show, I guess, making sure that you actually, motor vehicles are going to be your big number one hit because of data matching and the fact that, they're collecting toll information and knowing where you are. Key takeaway from today then, when we talk about reportable FBT and salary packaging, what would you say to listeners then that would be your key takeaway around salary packaging?
Yes, I think in terms of the packaging, I think for employers, I think it's important to have an offering make that available, because whilst I said, salary packaging is the employee sacrificing future income, it's really about having a flexible remuneration offering. So saying you don't have to be paid fully in cash. You can also have non-cash fringe benefits. So it gives the employee some flexibility. Ultimately, an employee is not going to enter into salary packaging unless there's a tax saving for them. And so that's why it's important to have that offering.
And I might add, part of that salary sacrificing can also be additional super contributions, can't they?
Yeah, that's right. Yes.
Yeah, and more important for people getting closer to retirement. Obviously, people that are in their 20s and 30s don't give two tosses about it, but certainly those of us in our 50s and 60s, being able to do that's very key. So look, we're just about out of time. Paul Mather from FBT Solutions, absolute pleasure having you on the show. It's been a real education, which is what Dollars Making Sense is all about. So thank you for being on our show.
Thanks, Ray. Appreciate it.